Well, thanks for joining us this week. It is June 11th. We're recording this call a little bit ahead of time. I'm JJ O'Hare. This is my father, John. We're going to be going through a couple of different questions today. But before we get to questions, fun stuff. Clay shoot's coming up. We've been doing this now for 12 years,
Yeah,
and
amazing.
it's been great. We started in 2014. It's coming up next Tuesday, June 17th. So far, we've raised $43,298
And
doing this.
we're hoping this year to break 50,000.
That's the idea. So if you have anybody who wants to come, or you can spread the word, email us for an invite. Obviously, everything's still up on the screen.
Hey, and before you go on, this is new this year, and it was a last minute thing. We have a pig roast this year. This is
Yeah,
going to be a lot
it'll
of
be fun.
fun. And if it's successful, we'll have it next year. But it's another good reason to come out and join us.
Yeah. Um,
Questions. We're going to get to the questions in just a moment. But before we do that, send us your questions. You can send it to service@o'harewealth.com or text it to our main number. We might not get it. Well, we won't get to it today, but we'll get to it next week for you. But let's move on. What's our first question? Yeah, this came out this morning. Did the recent Consumer Price Index, or CPI as it's called, and what did it mean for the market? Well, we're going to turn that over to JJ and have him give us the answer.
fun. So, consumer price index is really the short term for inflation. It's one of the ways we look at it. There's headline inflation, and then there's core. Headline means including energy, basically, and core means it doesn't. Let's take a look at what happened. We came in at 2.4 for headline inflation. So let's go to the full screen. This is a chart. It's not updated for today of the components of CPI, headline inflation, and how it's worked. Green there is energy. Purple there is food at home. Orange is core goods. Dining is the light blue. But the biggest thing that's been a huge push for inflation, especially the past few years, you can see there is the dark blue section. That's been shelter. And right now, even that shelter line has been on its trend down. We expect that to continue, and I'm going to have you talk about that in just a second. But I don't think most people expected this number to come in below consensus.
No.
When you talk about inflation, everybody's talking about tariffs. If you were going to see tariff inflation, you'd see it in that orange section, which, as you can see, is almost non-existent right now. We didn't see massive new inflation, despite when surveyed, people expecting inflation to go back up drastically. When surveyed back in 2022, people thought inflation might get as high as 5%. Now it actually went to 9 in June of that year.
Yeah.
But even just recently, as recently as April, after the tariff plan was announced, people said inflation might get back to as high as 5, 6, 7%. We're seeing the opposite happen. We're seeing inflation continue to decline, sort of as we would have expected. And it's one of the things that when you talk about the Fed, what are they going to do for raising or lowering rates? Gives them room to lower rates. But let's specifically talk about the biggest remaining sort of challenge to inflation is a very sticky shelter number.
Yeah, let's talk about that. But great point, JJ. The number that came out this morning will make the Federal Reserve happy.
Yes.
The Federal Reserve is expected to start lowering rates in September or the second half of this year. There's nothing in today's number that would change that. In fact, I think it would make you more confident that that will happen. And that is good overall for the stock market and the bond market. But the shelter, it is 40% of the CPI, so it's a very important number. Shelter is rent, and homeowner's equivalent rent, which means you buy a house and pretend to rent it back to yourself. There's been a lot of change in the housing market in the last 10 years. I have two charts here. The left-hand side shows you the home sellers and buyers and shows you the balance or imbalance that's happened there. And the right side is borrowing rates. And I think everybody knows on the right side, rates have spiked up quite high, going from 2 to 3% mortgages up to 6 and 6.5. But look at the chart on the left side. That's most important. If you go back 10 years, 12 years ago, we had an imbalance. The light blue line is the number of people selling homes. It was 2.5 million back in 2015. But people buying homes was only about 2 million. That's the dark line. That solved itself, the supply and demand. I mean, this is basic economics. It got in line for 6, 7 years there. We had about the same number of sellers as we had buyers. Then COVID happened and everything collapsed. But after COVID, we had a huge spike. You had buyers up to almost 2.5 million people looking for homes. Well, there was only 1.5 million people selling homes. What does that mean? It means for every 2 houses that went up for sale, you had 3 buyers looking at it. So guess what? Prices rose a lot from 21 to 23, 24. What's happened since then? Well, look at it. It's completely reversed. If you look at the last 18 to 24 months, sellers have exploded. You have a lot more people selling their homes. Buyers have collapsed. You know, they're way down from where they were 3, 4 years ago. So we have the reverse now. For every 3 homes for sale, there's only 2 buyers looking for it. What does that mean? It only means one thing: prices have to come down. So shelter is going to go lower over the next 12 months, which means the CPI will trend lower as well. This is very positive news. It's not positive if you're selling your home because it's not good.
No.
And by the way, remember these are national numbers. Don't think about local numbers. There's always hot spots.
Yes.
I was talking to a real estate agent yesterday about, the east side of Milwaukee. Yes, Whitefish Bay is still hot.
Mhm.
They're still getting multiple offers for homes, but that's just that area. I have a home in Fort Myers, as most of you know. The prices down there are dropping. I'm looking at the homes for sale around me. The prices are dropping. They're probably down over 10% now year over year. Nationally, that's the trend, is decline in prices. Again, for us, for investors, this is a good thing because it's going to give the Fed room to lower rates. So we're very optimistic that the CPI is going to be a positive for the markets going forward.
Well, that I think concludes for this week's update. The 5 types of wealth, with a short video on it here explaining why you should tune in and read that book. But with that, we're going to close out. Thanks everybody for joining us today, and we'll see you next week.